What's up, everybody? This is a 10-question Accounting 101 quiz. And I have two more 10-question quizzes that I'll link in the description if you found this quiz helpful. You could take those once you get done with this one. They do not need to be in sequential order. And you'll have 15 seconds to answer each question. And I want to know, once you get done the quiz, how many did you get correct? Be honest in the comment section below. How many quiz questions did you get correct? All right, good luck on the Accounting 101 quiz. Question number 1. What financial statement does not reflect a company's cash balance? A, balance sheet. B, income statement. C, cash flow. D, statement of financial position. The answer is B, income statement. The income statement will calculate a company's net income, but it does not reflect a company's cash balance. You are going to have to go to another financial statement to determine how much cash a company has. Question number 2. If you debit a liability account, the liability balance will A, increase, B, decrease, C, remain the same, or D, net to zero. The answer is B, decrease. If you debit a liability account, it will reduce the balance of the liability. A liability's natural sign is a credit balance, so if you go to debit, it's going to lower that balance. Question number 3. Which one of these balance sheet accounts would be classified as a current asset? A, intangible asset, trademark. B, prepaid expense, insurance. C, a rental deposit that is not due back for 10 years. D, held to maturity investment that matures in 3 years. The answer is B, prepaid expense, prepaid insurance. Prepaid insurance would be considered a current asset and will typically cover a period of time of 12 months. This will be classified as a current asset. Professional consulting incurred, such as legal expenses where the company hasn't received an invoice but would be accrued and classified as A, non-current asset, B, non-current liability, C, current asset, or D, current liability. The answer would be D, a current liability. Accrued expenses for services like legal expenses incurred would be recorded as a debit to legal expense and a credit to accrued expenses. Accrued expenses would be a current liability because you're expecting to pay those invoices within the next 12 months. If you've gotten any value out of this video so far, please smash that like button and consider subscribing. All right, let's continue with the Accounting 101 quiz. Question number 5. What financial statement will capture the activity of accounts from the inception of the company? In other words, this report is a rolling balance as of a certain date. A, income statement. B, cash flow statement. C, balance sheet. D, statement of operations. The The answer would be C, the balance sheet. The balance sheet will reflect rolling balances of activity going back to the inception of the company as of a certain date. It will break down the accounts into three categories in the equation below. Assets equals liabilities plus equity. Question number 6. What account rolls forward all years of net income and dividends declared? A. Additional paid-in capital. B. Accounts payable. C. Retained earnings. D. Par value stock. The answer is C, retained earnings. Retained earnings is the accumulation of net income for all years less any dividends paid out to shareholders. Retained earnings will be found in the equity section of the balance sheet. Question number 7. If you credit additional paid-in capital during a share offering, it will A. Increase additional paid-in capital. B. Decrease additional paid-in capital. C. Net additional paid-in capital to zero. Or D. The balance will remain the same. The answer is A. It will increase the balance. Additional paid-in capital's natural sign is a credit balance. So crediting additional paid-in capital during an equity raise will increase the balance. Question number 8. What type of financial statement can be prepared using the direct or indirect method? A. Income statement. B. Balance sheet. C. Cash flow statement. D. Statement of financial position. The answer is C, cash flow statement. The cash flow statement can be prepared using the direct or indirect method. FASB recommends the direct method, but you'll find the indirect method in most financial statements. Question number 9. Hans Gruber, Inc. buys several work trucks for its delivery business. It's typical for the company to capitalize and depreciate these types of fixed assets. Where would you find them on the balance sheet? A. Non-current assets. B. Non-current liabilities. C. Current assets. Or D. Current liabilities. The answer is A, a non-current asset. Capitalized assets such as automobiles and equipment will be found in the non-current assets section of the balance sheet, shown net of depreciation. Last question. Hope you made it this far. Question number 10. John McClain Enterprises takes out a loan for $1 million with a 5% interest rate, which requires an annual principal payment of $100,000 over 10 years. How much of the loan would be classified as a non-current liability, assuming no payments have been made? A. $900,000. B. $1 million. C. $100,000. Or D. $950,000. The answer is A, $900,000. The loan would be recorded and broken down as follows. $900,000 would be a non-current liability. This is what's due beyond 12 months. $100,000 would be a current liability. This is the current portion of long-term debt. $50,000 would also be a current liability. This would be the accrued interest, assuming a full year has passed. All right, that's the Accounting 101 quiz. Please let me know in the comments below how well you did. Did you get 10 out of 10, 8 out of 10, 7 out of 10? Let me know how you did on the quiz. Thank you for taking the quiz today. Have a good rest of the day, and I will see you in the next video. Take care, and goodbye.